Hey everyone, my name's Andy. I'm from Finding Value Finance. I'll be your host today. We've got Casper with us, USELINK INV. I believe he's got a YouTube channel with that same name. You can see that. Check it out. I wanted to bring him on, get some charting from him. It's always best to have multiple opinions looking at the markets than just maybe mine. So thanks for coming on, Casper. Really appreciate it.
Yeah, as always, my pleasure. We do this on a regular basis, and I enjoy doing these every time. So fantastic. Thank you.
So how about we take a look and see what you're seeing in the uranium markets? I know a lot of people are getting nervous
Yeah.
with the recent sell-off in uranium. So what are you seeing? Do we have further downside in your opinion? Are we going to turn here? What do you make of this pullback?
Yeah, let's dive into business. I will share the screen here very quickly. There it is. There it is. Good. It's good for you. You can see it. Awesome, awesome. Well, most of the time I use the URANIum as, where I do my technicals because it is a 100% pure play ETF, but it's only has been live for like 3 years, so we don't have much data. So at the beginning here, URA long term, I'm still incredibly bullish if you look at the weekly and the monthly timeframes. There's nothing saying to me that, oops, we are incorrect with our thesis, both from a technical point of view, and if a lot of people have, just read a tiny bit here on uranium from a fundamental point of view, the fundamentals are still rock solid, and I think you agree. They're just fantastic. The deficit, all that good stuff. We can talk about that for a long time as well, but now we have technicals, which is what we are going to look into. So long-term URA, very simple, nothing complex here. We have the big bear market. This is from 2011. It actually goes further back to 2008, where we were at higher prices. So at least for 2008, down to roughly 2015 bear market. And then we started to base out really. And then, yes, we had the March 2020 madness, which usually when you have such a long downturn here and you see a massive spike, in this case to the downside, usually that is like an end of move type of situation. So we spiked down and quickly V-shaped back up again. And in my view, we started the recovery from the bear market and the basing. So yeah, let's zoom in here just a tiny bit here. So yeah, we came up here, came a long way actually into the big consolidation where everyone hated uranium for like, I don't know, 18 months or so. Summer 2023, we broke out and we're basically, has just gone up for now here. Yes, we're down, what, 10%, I think, from the highs right now, if I measure. Yeah, 13% from the highs. And as you know, in any commodity market, that's just, for now, that's nothing. You get way bigger pullbacks in silver and gold, uranium, platinum all the time. So for now, it is still very much bullish. Also, if you add in here, I can add in a 30 weekly moving average, which I tend to use quite a lot here. You can still see here that it is coming up here, and we're actually at some big support here right now. So long term, if like 2 years, 4 years, 5 years, I'm still hugely bullish on uranium. Short term, which we can look into now, and I will go to the URNM chart, is a bit more iffy. We had a lot of big volatility here when we actually broke that 2021 high over there. Many people were bullish. I think we had some Kazatomprom news here in somewhere, and then the Cameco, I think it was the 2023 earnings, was a Q1. I don't know exactly, but that it did a bit of a pop and then it just came down. So Cameco has basically pulled everything down because Cameco is the big blue chip company. So for now, we did break above, beautiful, retest, lovely, and then resumption, retest, and we coming down here. So in order for me right now here to become bullish here short term, it's very simple. We need to get back above, we need to get back above the 2021 highs, and basically also this red triangle here. That is, it's not ideal that we are below right now. So we want to get back above. And also, even though I have it in blue here, you can see here, and that's also the reason why I'm a bit more bearish here short term. is the reason that we have this bear flag sitting right below the wedge here. We have a bear flag there, you can see it. And again, it usually leads to a move down. So yeah, short term, we could see a bit more pain here. But again, long term, there's nothing wrong with it in my view. We still have this blue uptrend channel here, fully intact, nothing major has broken. We have deconnections there, and there. So again, here within this green downtrend, which is kind of a bull flag. So as long as we're inside here, it's all good. And hopefully we find support at that blue and we start to curl up again here. So I think we could have some sideways to down action, at least at minimum here for the next month or so, before we potentially can break higher. If we start to lose the blue here, then yes, then there's definitely more downside to come. But again, also, it's not a chart that we will look at here, but if you look at the URANIUM spot price on the daily, it's getting very oversold at the moment. So we should see a bounce here, at least for the spot price, which should help the miners. So long term, as I said, the past few times we were on here, very bullish. And yeah, short term, it's a bit iffy right now. I also think last time I was on, I said the same thing here. Short term, we could be breaking down. I actually think we were roughly here. Isn't it true? I think 3 weeks ago or something, we were roughly in this vicinity here. So yeah, I think short term, that could definitely be more downside, downward momentum to come. Definitely.
And if you go back to URA, you had that on the chart. You had a line going across that we hit our head on, basically that orangish line. You have a line going across the entire chart there. What's with that line going across there?
Basically, there are two.
Yeah, the orange line. Yep, that line going right across there.
Yeah, this is
resistance.
The resistance line here, exactly. And what is we basically peaked above, and then we came into yet another big resistance. So we have two big resistance line here. The horizontal, if we take that first, in my view, defines if URA went up to 2008, it would probably look something like that. So to me, this is the downtrend, and below the white there is probably, depending on who you ask, but that could be the basing. Again, you could also argue that the basing pattern is actually over because it is roughly down here. You can see it there. That could also be the basing, depending on who you ask. So you're breaking out from the basing, and then you are actually in the stage 2 uptrend here. So it depends on who you ask. But it is definitely a big level here. Also, the fact that we have the big spike high there in 2021, which is, in my view, the last resistance or the big level, the level to get through. That is the 2021 highs. But again, same thing here. You can see we are still in this golden uptrend here. So it's all okay from a long-term perspective. And hopefully we can just slide, a bit lower here, and then we can bounce into July, and then we go higher. So I think here we need maybe a month or two where we will not see big spikes, and then we can go higher. Again, I could be wrong, obviously, but again, that would be my take on where we are right now with the charting. So
now here's a question: could this be a potential double top in the short term? We pull back further outside of that yellow uptrend line, which would correlate with a potential peak in the NASDAQ or S&P 500 or something like that. Is that something that is possible in your opinion?
Yeah, for sure it is. For now, I just have that line on here because it is the March 2020 low. And then that right here we have where we actually started to break out from the wedge there. So ideally we want to stay here. But often you can also see a break, and depending on what happens after the break, if you start to collapse big time, that means that we're definitely in for a bigger downturn. But if you leave that yellow uptrend channel there and you basically go sideways, that's not the end of the world. But in relation to peaking, with the NASDAQ and all that, I don't know. I think if the NASDAQ starts to peak and you have depending on how it comes down, if it comes down heavily, everything will get taken with it. That's just the name of the game. People have to, sell stuff to cover their positions and all that good stuff. But if it comes down gradually over basically doing nothing and then a small bounce and a bit more down, kind of like a stagflation, thing, then yes, then commodities will not get pulled down and they will take over big time. That is definitely my view on that.
Okay, so if you're an uranium investor, which you are and I am too, what if someone were to ask, should I go and buy uranium at this time? Companies, and I'm not trying to give any advice or anything like that, but like, what would you be doing today? Would you be waiting for a better entry point, or would you be chomping at the bit here to try to get in some uranium companies?
I think if I were brand new and I wanted to get in, I would definitely buy into some of the stocks that you think are from a fundamental or technical point of view looks good, but I wouldn't do it with your entire position, not 100%, maybe like a third, and then you can scale in. If we drop lower, you can scale in, and ultimately when we break out above that, what's that, 30, 32 here, then you can also add the last chunk. That's one way to do it. And the second one is basically just wait till we get that double top taken out. Then you can start to look into the miners and all that. And if we have, that's also one way to do it. And if we don't break it here and we have a big correction, you still have your full size, what you want to invest, and you can buy cheap at some point in time, probably down here at roughly 19. So again, you can do it different ways, but one thing I wouldn't buy, everything here right now with whatever capital you have, just buying in. That wouldn't be the best thing to do. Long term, I think it will probably work out fine if my theory with regarding to uranium does what I think it will do. But again, if you buy in here for the first time with a big chunk of money and you start to see a 20% drawdown, that's not a good start to the uranium investment, that's for sure. So you can do it multiple ways. It depends on who you are. So
what about like URA divided by uranium futures pricing? Because I know that looks a lot better in terms of charting than the ETF does straight up priced in dollars.
yeah, for sure.
So
I'll
how
take
would you, if that looks a lot better, I mean, wouldn't that be an indication that maybe we should definitely be looking, or are you looking for alignment in the ratio URNM UX1 and also in dollar pricing, where they both show a pretty good chart pattern to work on up? That's kind of what you're looking for, right?
Yeah, it is. I mean, I look at the URNM to the uranium spot price every week, multiple times during the week. And I also posted a chart on this one here. And I think what we have here, again, I'm not a master in Wyckoff, accumulation and distribution patterns. But again, I'm very confident that this is what we have here is a big, Wyckoff accumulation pattern here. You can go check it out and you can overlay it and you can look at it here. But I'm definitely in the camp that this could be that big, low spring, and then it blasts, oops, excuse me, and then it blasts higher here, and then we spring again, then we can potentially go higher. If you add in the Wyckoff chart to basically this pattern here, very similar. Or you can check my post from like a month ago or whatever it was. It's very, very, very surprisingly correlated to this chart here, or they are very similar. So yeah, from a uranium for URNM to uranium price perspective, it's incredibly good, and you're still buying insanely cheap if you look at the ratio only. Basically, we are at the level seen, last time we basically broke out into the bull market. So we are at the exact same level if you measure against the spot price. So you're buying basically at the same price in relation to the spot price. So from that point of view, you're still buying cheap. If you leave the USD aside and look at the underlying metal, you're buying just as cheap as you did 3 years ago, 4 years ago. But again,
well, that's good to know. At least we know that we're cheap still.
Yeah, we are. I mean, that doesn't mean that we're going to go up, in the individual miners and so on. But definitely that is still, you would much rather want to buy down here if the pattern is good compared to when we are very elevated. So, and still, even though we are only like 13% off from the highs from like 8 weeks ago, people already start to hate uranium. So that is always a good thing to see, in my view. Again, I could be wrong, but that's just the Twitter what's it called, sentiment. is almost never wrong. So yeah.
Gotcha. Now, how about we shift over and just look at the NASDAQ? And the reason I want to go to the NASDAQ, or hopefully you've got that on your chart.
Yeah, somewhere I think I have it. I think. No, I didn't.
Maybe. And the reason I say the NASDAQ, or you could use Amazon or whatever else, do those look bearish? Because sometimes when the overall market falls rapidly, it can yank down our commodities. And I know some people get worried about further downside. Um, is that a possibility where maybe some of these large tech companies start to roll over here and start to head lower, which could yank down our uranium investments?
Yeah, just basically, I want to show you this is the Nvidia. You know, it has risen from 100 to like 1,000 in, I don't know, what, 14 months or so. Absolutely fantastic move. And I definitely, you know, this one got away from me because I had a, you know, a bias that it couldn't go up. But here we are. But I want to show you the Friday's candle. Again, I'm not calling a top here per se, but I'm just, you know, we had we. I want to zoom in a bit more here so you can see it. There it is. This is the Friday's candle. And basically closing, opening, we're gapping up, coming up to the highs, and then we're just coming crashing down big time. And that is not bearish per se, but the volume is 2x of what you normally have. And if you go, you know, for a long time, we don't see this kind of volume very often. So definitely that could be a potential short-term top here. I'm not calling for a long-term top, but definitely, again, here, if you, again, back to the sentiment on Twitter and, you know, mainstream media and so on, the time to buy Nvidia is not here. That is a given. The time to buy is obviously when you have the patterns breaking out and all that good stuff. That's when you want to buy into them. But buying here at these elevated, you know, overbought conditions, yes, it could go higher. But in my view, I don't care at all, because buying here from a risk reward perspective makes no sense. Makes no sense at all. So yeah, definitely. And also Nvidia, I don't know how big the company is now. It is $2.1 trillion market cap company. So on that day there, I think it dropped 5%. That is like, what's that? $200 billion in one company. So if Nvidia starts to correct heavily, that could take down, you know, a lot of sectors with it, due to the massive amount of covering that people have to do. They might have to sell some gold. They might have to sell some whatever it is in order to cover that position if they are leveraged. Yeah, it could be a big one. So I'm not a bear or any, you know, I'm not bearish, but I'm calling for that this. I think we're coming to an end here. Also, the fact that we are pretty close to the 1,000 mark. When you go from triple digit to 4, usually that is a massive resistance. Same thing as you go from, like, you know, 90 to 100, massive resistance when you get to the 100. So yeah.
Here's a question. I know you had that big bearish engulfing candlestick on Nvidia. If you look at Camco CCJ on a monthly time frame, you also get this big bearish engulfing candlestick that shows up on Camco, which is, you know, one of the leaders. So if you back out and then you use like a monthly candlestick and you look at it, we have a big bearish engulfing there just recently.
Do. Yes, we do. But again,
and it's got a similar pattern to Nvidia, which is you got your sideways motion and then you have a spike up to resistance, and then it looks like we've pulled on back, obviously. But do you think there could be further downside there if the overall markets, like the technology stocks, fall, and maybe it brings down Camco, because it does have similar patterns between those two? You know, what's your opinions there?
I think the difference is, I'm not saying that Camco cannot come crashing down here, obviously, but I think the difference is, if you look at the chart, that Nvidia is basically at massive all-time highs. And I think right now I have it on log scale. But if we go to Nvidia on a regular scale here, or you can see here, this is way different than the Camco chart, because Camco is basically at its previous all-time highs. So therefore, it's not in any blow-off top kind of scenario right now. But this, to me, on a monthly, yeah, again, I know many people at my work, and also they're talking Nvidia. But again, this to me is just a mega blow off top. It can go on for a long time. You know that, you've seen it before. Also to the downside, stocks can be hammered, every single day for a very long time, even though it doesn't make sense. But again, here, I wouldn't be shorting it, but I'm definitely looking to a big retrace here at some point in time, without a doubt. And usually, when you have a blow off top, the first big support is actually the top of the previous consolidation pattern. So,
Yeah, I agree with you though. I really don't. I wouldn't be touching that stock even with your money.
no, no. But again, the time to buy again is always when it's quiet or when you have breakouts from big patterns. In this case, you had the quiet period here. That was your entry. I mean, you don't have an entry up here. That's just madness to do. Yes, it can go up 50% more, but again, you don't have any navigation where to place your stop loss. How low can it go? I mean, it's just risk reward. It doesn't make any sense in my view to get into Nvidia at this point in time. So